There are some frayed nerves today on Wall Street. That's because the Dow erased all gains for the year last week. So will there be a rebound? And what does this mean for your 401k? Here now is Joe Gallagher, a certified financial planner from LPL Financial. Joe, really appreciate you joining us here. I want to start with a headline that I read today in the Wall Street Journal. It called this the most dangerous stock market since 2008.
Sure.
Would you agree?
Well, I always hate to see that starting with the guy with the hand over his face. You can tell what type of market we're in, but it is dangerous. The things that the professional investors are talking, though, are not earnings, as we see earnings run the market, but things such as Ebola, not so much that it's become a pandemic, but it's going to slow down spending. You have what's going on in ISIS if they invade Baghdad. That could really affect the energy markets, which are already under a lot of pressure in the other way because the dollar is so strong, lowering prices, which is good for gas but causing other problems. But it's a dangerous market. Obviously, we've seen this great uptrend since 2008's correction, and anything can happen.
Would you still categorize this as a bull market?
Oh, sure. No, you need a correction, so you need a 10% return from the top before we even talk about reversing trends, and we're about 5% off right now, so we have some room to move.
So much talk right now about just waiting to see when is the Fed going to make the move.
Right.
When are we going to see those interest rates go up? How much of that is going to be influenced right now by the markets overseas, where you're seeing those drop drastically in comparison?
Sure. Well, you had these dissenting voices for a while. You had Plosser and Fisher, which are two of the Fed chairs, not the main one, but two of the city chairs. And what's going on overseas, especially in Europe, you're seeing sovereign debt being downgraded. France just got downgraded. So there's a lot of problems there. We're keeping a strong dollar, which is keeping our borrowing costs low, which is keeping rates low. And also, it looks like we're going to be pretty dovish on this. The market starts looking sketchy. I wouldn't be surprised to see more activity from the Fed.
So that said, when you're figuring out what to do with the 401k, I mean, where do you go from here when you look at just the volatility that seems to be in the market? Right?
Well, it's a question I'm asked every day, and it depends. I mean, in general, if you are doing this on your own, you're not working with an advisor, best thing to stay the course, as I was talking about earlier, is you look from 2003 to the end of 2013, you're investing in the S&P 500 broad index of stocks, you get a 7% rate of return. You miss the 10 best days, you get basically no rate of return over that entire 10-year period just for 10 days.
So stick with it.
Yeah, unless you're brilliant. You're a brilliant stock investor. Take your chances, but you're usually better staying the course.
And some good news is that the price of oil has been dropping. How far do you see just gas prices going down?
Well, I talked to the people at the commodity exchange. Now, gas prices are what we call a lagging indicator. So first, oil goes down, and then Exxon catches up, and the other oil providers. I hear as low as $2.50. I think that's optimistic. You're not going to see $2.50 in D.C.,
I'm
of course.
on that, my friend.
But you could see it. You could see them come down a little bit more, I would imagine.
We will certainly take that. Joe
Thanks.
Gallagher,
Yeah.
appreciate the time, my friend.
Great, Nick.
Breaking
Thank
it down for us. Now, Howard Bernstein, how about